It's about that time of day again. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. It's Tuesday evening, September 20th, 2016. Cruising our way through this fourth week of the month of September. Hope you guys had a great week with us so far. We're gearing up for the big FOMC announcement tomorrow afternoon, but that doesn't mean we can't find some reliable trading opportunities in the first half of tomorrow's session. And of course, we got a great plan of attack for you guys and gals this evening. Crude oil is parabolically bullish after this evening's API report. Parabolically, that's a big word. E-mini S&P is trading in a very similar situation as we saw in last night's newsletter. Gold is range bound, supplies, and of course, Euro is bearish after successfully filling the gap down at yesterday's low. Boy, I have a great newsletter and a great plan for you guys tomorrow. We got a big news report tomorrow morning for crude and the rest of the world, looking at the FOMC report. Before we jump into it, though, don't forget the only place to watch the full-length version of this video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry. There's a link in the description of the YouTube video. Follow that link. Come over here and watch the full version of our nightly newsletter on our blog at Sideways Markets. And while you're here, don't forget, join the mailing list. I'll send you an email every evening when the nightly newsletter video is ready to be watched. Download the charts right below the video tonight. You can have all the charts that you see me using in tonight's video. That's right. You can have them on your computer for tomorrow. In the upper right-hand corner, you better grab your free pass. If you're not a member here at School of Trade and you'd like to come out and join me as a guest for a couple days this week or next, grab your free pass in the upper right-hand corner. Come out and test drive the trade room. And don't forget, over here on the right-hand side, you can join the trial membership, learn more about what it means to be a member. Got a bunch of great frequently asked questions. You know what I always remind you guys, you're going to learn more with me in 1 week on my trial than you will anywhere else on the interwebs. I can guarantee you that. And I'm always here standing by to answer all your questions 24/7. Use that live support button on the right-hand side of the website. There's also a live support button on the homepage at SchoolOfTrade.com. Boy, we've had a great few weeks here in the month of September. Drum roll, please. Yeah, tomorrow's the big FOMC announcement. I don't think there's a snowball's chance, and you know what, that we're going to get a rate hike tomorrow. But who knows, right? Who knows? Janet Yellen and co., my gal, right? She's been known to throw a little bit of curveballs out there here, so we'll see what tomorrow brings. Looking at tomorrow's news reports, though, first of all, tonight we got 7:30 p.m., the merchandise trade from our good friends, the JPY. I'm not expecting that to be much of a market mover just because all eyes and ears are going to be focused on this FOMC announcement day here tomorrow afternoon at 2 p.m. Eastern time. So, you know, really, when it comes to an FOMC day, the Federal Open Market Committee meets 8 times a year. It's a 2-day event. That's right. It started off today, right? We had a great day. Like I said, we weren't expecting to see very much of an impact today, but tomorrow, though, think of tomorrow like a Friday, right? Or more importantly, like a late summer Friday, right? It's going to be an early in, early out scenario. And usually what happens is right about 10:30, 10:45, 11 o'clock, we start seeing that volume dry up. Ranges start getting narrower. Watch the ATR indicator tomorrow at the bottom of the chart in the trade room tomorrow with me. And we'll see this thing narrow out. And really the reason why it narrows out like that is just because large position traders are not going to mess with the volatility. And, you know, ultimately, even though volume increases, the volatility increases so much more, right? Because liquidity, right? And liquidity is a big problem, right, during news events. So the bottom line is for tomorrow, is we've got that major report at 2 p.m. Eastern time tomorrow afternoon. But you're going to start seeing the big lot traders scale back positions, especially on markets like gold and the S&P, Euro, of course, right? Crude will probably be the longest mover tomorrow, but we have the inventory report at 10:30. So, you know, if it wasn't for the inventory report, I would say crude should be good all the way until lunchtime tomorrow. But as you can see here, we got the inventory report on crude at 10:30, which means after 10:15, we expect to see some low volume going into that inventory report. And then typically you'd see crude oil pick back up again after, 10:45 or so. But, we may not get that much more out of it tomorrow just because we have the FOMC announcement at 2 o'clock. So watch the clock tomorrow. You should be good until at least 10:30. And then once we see 10:45, 11 o'clock, that's when things things start to get a little bit hairy here. And of course, we got the announcement, right, the forecast, and of course, the press conference. I'll tell you, the best TV you're going to see all day tomorrow is going to be that press conference tomorrow, because I have a funny feeling there's going to be a bunch of curveballs being tossed at my gal Yellen, and she's going to have to be prepared, right, to kind of deflect a lot of this stuff, because, of course, the political climate here right about now is it smells like roses out there right now, right? So we know we got the big news coming tomorrow. Be aware of that. Get in early, get out early, right, and then let that crazy train come and go, and then we'll look to play it after, right, the news comes out tomorrow. And of course, we'll be hanging out in the chat room tomorrow, in the trade room tomorrow. I look forward to seeing you guys there, and we'll put together this plan. Boy, I'm looking out of the corner of my eye right now, and I see crew just continuing, parabolic right now. And I was trying to give you a heads up about this 45.20, right, this news double up. But I don't think it's going to even get a pullback here right now. This market is on a tear right now. Crude oil, if you can't see from the chart, is parabolically bullish. And the term parabolic just means it gets steeper and steeper and steeper as it goes. Now, a lot of traders like to fade into this. I'm not a big believer in selling into a move like this. Eventually, it's going to come back. But like I always say, I'm not going to be the one that wants to guess when eventually begins. So I'll never recommend that you sell into a move like this. I'll always recommend that you wait for it to pull back, seller failure, and then fade off the high. Let's talk about this, right? So we're parabolically bullish after this evening's API report. If you don't know the API report, okay, you don't really need to know the API, but if you don't know about it, it's covered in our beginner's course. Okay, we talk about the API report Tuesday evenings, the inventory report Wednesday mornings, along with the FOMC, the non-farm payrolls, and all the other important news reports you can remember, right? So this evening's API report, 4:30 p.m. on Tuesdays, right? And now we're trading at the highs of a bull channel. In fact, we're going through the highs right now. Usually we don't get this much action in the overnight session. This may be because of that FOMC announcement tomorrow. This may be traders just trying to get whatever they can get right now, right before Yellen shuts things down tomorrow late morning ahead of the inventory report, right? So we're trading at the highs of the bull channel, right, through the highs of the bull channel, which means the sellers will be trying to fade the news back to the low of the channel, while the bulls are just trying to stay patient to see if this market wants to hold the support trend line and keep going, or wait for the opportunity to buy this at a cheaper price. Right now, the most reliable trade for the buyers will be to wait for either a two-legged correction off of these highs and then look for seller failure to buy it back up again, or get a strong breakout pullback above the measured move, or the sellers need to finish their work back down to those lows, and then the buyers can look for opportunities off the lows of that channel if this thing ever slows down here, right? I see a wick. I can see a wick forming right now, so they might be listening to me out there. Sellers, on the other hand, have absolutely zero proof and don't want to get caught trying to sell into this runaway market. So the best option for the bears is to wait for the next pullback to fail and then see if they can get their own pullback to hold for a big collapse back down to the lows. Now, this is when it comes to being a seller right now, this goes against all human tendencies. Right now, buyers want to buy, right? And of course, a little bit of experienced traders want to sell into this. We really don't want to do either one of those. When it comes to selling, there is so much open space below us that it makes no sense to try to force it or guess. You could flip a coin right now, right before we have proof, right? And guess, right? So stay patient if you're a bear right now and wait to see proof. For example, right, a lot of new traders would think, well, I'll wait for this red candle here and I'll sell the red candle. No, there are likely buyers, right, someone like myself that knows you're going to do that, and what I'm going to do is I'm going to buy into it, knowing that as soon as it starts to go higher again, you're going to freak out, you're going to cover your short, and I'm going to have an easy target right up to that high, right? We call that a strength trade, by the way, here in our trade room. And so you do not want to just try to sell this first red candle. Why? Because professional traders know you're going to try to sell this, and they're going to really make you uncomfortable most most of the time. Obviously, I can't predict what this one will be, right? But statistically speaking, though, a red candle in this type of move for a professional is seen as a buying opportunity, not as a selling opportunity. Again, like I said, this is going to be uncomfortably out of our comfort zone as human beings. So think like a trader who has control. The buyers have control right now. When can I sell then, Joe? I can sell when the sellers take control of this market. When would the sellers take control of a bull market? When we see the buyers fail and the sellers then take control. So as this market goes higher, just for example, right? As the market goes higher here, big run up, wait for the buyers to fail. That'll be the first chance, and then try to hold your own pullback on the opposite side, right? So here we have buyer failure. Okay, that'll be the first time you can be a seller. Yes, that'll be the most aggressive. The one you really want to sink your teeth into is once that pullback holds as it goes lower. Like I said earlier, you've got all this open space down here. What are you worried about 5 or 10 ticks for? Get the proof. Get the proof. The hard part is going to be right now staying patient. Because right now, those synapses are just firing, right? Like fireworks right now going, it's probably going to come back. It can't keep, oh yes, it can keep going higher, and it will. As soon as you jump into the downside, right, you know that's how these markets work. It will go higher, right? As soon as you get into the position. So stick to the plan. It's a bull market. Be a buyer until it turns into a bear market. Now, this is the tough part. Obviously, we're so high up right now. Being a buyer, right? I'm getting a nosebleed. We're so high up right now. And really, what you want to sink your teeth into right now is all of these support trend lines. The high of that channel is going to be the first one, right? So the high of that channel, line that up with the measured move. Okay, and that's where you want to be looking for the first one. The second one here is this one right here, right? That's another one. Okay, and then of course, the last one's going to be this one all the way down here, right? Back around that triangle. What I would be looking for right now, is I'm looking for counter trend sellers to try to fade this move because I know where their stop's going to be. And I can buy into that failure. So let's play devil's advocate here. If you're a buyer right now, right? Price pulls back to the measured move, the high of the channel. And what do we see, right? We're going to see sellers try to fade this, right? They're going to try to fade this move going back down into that range, right? Remember, like I said earlier, this puts a new trader in a position where you almost can't resist yourself. You want to sell that high. And I know this because that's how I blew my first account, right? Trying to fade big moves, right? So what I'm looking for now is can those sellers fail and can I buy into their stops? Again, when you're trying to sell into a big move like this, your exit, right? Your finger is itching on the exit button, right? If you're human, right? If you actually care about the money in your trade account and you're trying to sell into this parabolic move, you're probably going to be itching to get out of that trade, right? Cover your short position the moment this thing starts taking off against you. And so that's what you're trying to play against, either here or here. Now, the hard part here is that now you've got that measured move area acting as resistance. So this is going to be a bit of a balancing act here right now, right? Be a bit of a balancing act. So we're looking at the high of this channel, right? The high of the channel, seller failure, right? Going back up. That will be kind of the easiest one just because there's nothing in the way before we get to that 45.20 news target, right? If we come back down and we end up getting below that measured move will act as resistance. So watch out for, right? Watch out for that in the way. And then really at this point now, if we don't get these buyers to hold above the measured move or above this trend line here, there's a big wide open space down here now before we run into the moving average, right? The moving average coming up. And of course, before we run into, right, that rising support. So if you're a buyer, obviously we'd love to be buying down in these lows, right? We'd love to get this price down to these lows and then look for that, right, continue back higher here. One situation, remember, is that if we do collapse off this high, this becomes a bear market. So a seller failure at this point is going to be low reliability until the buyers can hold that pullback, right? Kind of think of it this way. right? Something like that. You can be a buyer here.